Afternoon. How are we all doing? Afternoon in. Kennelly, Evil, Peter, JC, Mark, Rico, Alex, Amy, Virginia, Gregors, Fletch, Marion, Sean, Nigma. It's time. Neo, how are we doing? All good? Right. Let's have a look at stuff. So today we are we've had durable goods this afternoon, came out at 6.1 negative. The main news we're on for this afternoon is consumer confidence, which comes out at 3 o'clock. So we've got just over 10 minutes until the news comes out. Not really an awful lot of news today so far. It's just been in one of those days. Durable goods had a bit of an impact on the US dollar. So if you look at the the Euro US, little bit of bullish move on the Euro US. Same with the Pound US, but nothing particularly dramatic. We're basically where we were. Hang on. So not really a lot of movement. You can see obviously all the way down to ADR. We got absolutely miles of room. Nothing's really moved off the back of that news. So that's really all we've had. This is all going back right to this morning. There's nothing else really at all to look at. So we had Yellen speaking early hours of the morning. Stronger global growth, inflation to decline in 80% of economies this year. As we know, we're going to be dropping the interest rates because of that. We had the CPI this morning for Japan, which came out at 2.2 on a forecast of 1.9. So it did drop. They were forecasting a drop, but it didn't drop as far as they wanted it to. So impact on the yen this morning was a nice little drop. However, it's pushing back up again at the moment. So again, these yen pairs, we keep getting it look like it's about to start a move, then it fails. Then it looks like it's about to start a move, then it fails. And it looks like it's about to start a move. One of these moves is actually going to work. But we'll see. So this is, so far, today's move is pretty much the strongest we've had for a good couple of weeks now. So we will see if we get any follow through on this one. But as you can see, reversal alerts have gone in across the board on the hourly time frames. CAD-Yen didn't even manage to push up. So we'll see where we go. So things are starting to move a little bit. There's no RSIs to look at all today. Totally flat. As you can see from the price action, very, very little movement yesterday. Very little movement yet. I mean, it's just no movement. We're getting the odd move which gets undone, and it's all just grinding around. There's still no movement on anything, really. If you look across the board at the majors, I mean, we're just not going anywhere. So yesterday was an inside bar. Today, so far, is an inside bar on yesterday. So obviously, you can see by the price action on pound US dollar, we had that whacking great day. Then we put in an inside bar. So we didn't break the high or the low of the previous day. Yesterday, we put an inside bar on that day. Today, we're putting in an inside bar on that day. Yeah. Symmetrical triangle. We've got complete contraction. The market is just not moving. So not a lot we can do. We're just sitting there waiting for someone to do something to shake the thing to life. Afternoon, Sagar, day trader. How we doing? So there's your news. Very little news, very little movement anywhere. I've incorporated this news feed as well now onto Discord. So if you're on the Discord channel, it's in there now. So you can see Financial Juice News fed live into Discord. So you can just use Discord if you want to keep track of the news. Now I've got my window and I can't put it back to where I want it to, because Windows likes to snap things around all over the place. Right. So countdown to the news is on. Indices so far today. We had a lovely break on the DAX this morning. Lovely, easy money, clean break. We broke the pre-market range straight up. I got a 1R and a 3R. The 5-minute ORB, if you took that one, same thing. So lovely clean break on the DAX this morning. The FTSE got hedged. So the pre-market range was too tight, so took the 5-minute ORB, and the 5-minute ORB has literally gone nowhere. We are back inside the opening range. So with FTSE, we're hedged on. Well, I'm hedged on at the moment. So just waiting for the FTSE to actually do something. We'll see. So US indices, let's have a quick look at those. NASDAQ, clean break to the downside. 1R and 2R hit. So I'm out of that, profit banked. Dow, no trade today. S&P, no trade today. Pre-market range was too small. Post-market range was too small. Wow, look at that. So the pre-market range was less than 10% of ADR, and the 5-minute opening range was less than 10% of ADR on the S&P today. The Dow Jones, same. Pre-market range was too short, and the post-market was 77, too big. It's like Goldilocks, isn't it? So the pre-market range was too small. The opening range was too big. But NASDAQ, I mean, looks like I'm going to get stopped out in the second half. Just to update you on the stock index hedge, EA and strategy, I've built an automatic re-hedging system into the SIH EA. So if we look at here, hedge recovery, I haven't released this yet. It's in testing. I've been live testing it all morning. Back testing it all morning, and it's live testing now. So I'm live forward testing it on here before I do anything with it. So we've got 3 new settings that have been introduced. 2 new settings that have been introduced. Automatically re-hedge if aggressive exit fails. So this is basically where we get hedged, long and short. We get out of one position, we get into an aggressive move to get out, aggressive position. It will automatically re-hedge for you, moving up if price pushes up, and it will put a TP on that hedge as well. So if price, basically what I'm using is, which seems to be the sweet spot, is 2 times the range. So what that hedge is, 2 times that hedge. Basically, we get out of that and then we try and get in again on another aggressive exit. So basically, it's constantly banking on these big days that we get where we get hedged. So I'm testing this, but it looks good on paper. It's something I've been manually doing myself, but I've just built it in automatically onto the EA. I was kind of hoping to get hedged today so I could test it, but sod's law, 2 of them haven't triggered because the ranges and the conditions are wrong, and that one's a clean break to target. So there you go. But there you go. There's your indices. We've got 5 minutes until the news. Marion, what about US dollar yen? So US dollar yen, nice breakdown today. So we've got a nice reversal. So we took out the high of last week. The US dollar yen, basically, we've got these 2 areas we were focusing on, which was last week's high and the previous week's high, because we've been stuck in a range basically now for 2 weeks. So yesterday we basically tapped the previous week's high, limit orders triggered and drove the market back down, or rather didn't let it through. It didn't really drive it down. What happened yesterday was we basically rallied up into last week's high, which was Friday's high. Market stalled out before the close, and then obviously we had the Japanese CPI figures come in, which rallied the yen. So we've got another reverse alert gone in. So this basically has got the potential to be an M pattern reversal. So we will see. But as you can see, we are literally doing this because we're waiting for data on the US. We're waiting for confirmation from Japan as to whether or not they're going to increase their interest rates. So the CPI figures are going to help because CPI is getting closer to target, but it hasn't come down as much. So it's more encouragement for them really to get that interest rate back to 0. But we will see. So yeah, nice break. So looking for a retest and drop. We'll see. So there's no RSIs to look at today. There's nothing on the hourlies. There's nothing on the 4 hourlies. There's nothing new been taken. ADR reversals. There's only the one today. Again, Aussie dollar, New Zealand dollar. So big push up. We had exactly the same yesterday. So yesterday was an ADR hit to the upside. Reversal alert entry you can see there. So that was the 5-minute reversal alert after the ADR hit. Straight in, straight out, down to propulsion target. So if you took this one today, you're on your way to target, which is there. There's your 5-minute reversal alert. So beautiful M pattern, switch down to the downside and you're out. Basically, if you're looking for half an ADR on it, which is 20, you're at 16. So you're virtually there to target anyway. But I would be targeting the propulsion gap. Exactly the same play as yesterday, basically. Pushed up, ADR reversal, out. So that's the only one today, though. So as you can see, there's just not a lot of movement anywhere at the minute. Flat as a pancake, as they say. We'll just wait for this news to come out. We've got 2 minutes. We'll watch the... What should we watch? Let's watch... What's the strongest at the moment? Either or. We'll watch the Euro US. And we'll see what happens off the news. Afternoon, Crom, Champagne. US dollar strength coming in. A little bit. Afternoon, Pip. Not a lot. A bit. Everything's within ADR today, so nothing's particularly moved fast. As yet, anyway. We've got just under a minute. I've been doing some back testing as well with the new position trading EA. I put a post in Discord about it today. I've been really nice not doing so many live rooms. I'm actually getting so much work and research done. It's fantastic. But yeah, I've been doing loads of back testing this morning. Basically just data validation to make sure that the EA works under different data testing conditions, and some very interesting results, which I'll go through in a sec. We'll just wait for this news to come out, and then we'll have a look at the positions as well. 10 seconds to go. Afternoon, Evil. Not sure I understand correctly when the auto hedge kicks in. I'll show you in a minute. Okay, so initial reaction is negative US. So it looks like a negative number. -5. That's Richmond into manufacturing. 106 on a forecast, 114. That's a big miss. See what the market makes of it. Consumer confidence isn't. This is a very hit and miss number. Sometimes this has a really big impact. Sometimes it does absolutely nothing. So we'll just wait and see. Basically, it's a little bit like the University of Michigan. University of Michigan, they interview 500 people. Well, they survey 500 people to find out what their view is of the economy and how everything's going, blah, blah, blah. This is a slightly different poll in that it's a wider cross-section. So the market, I mean, the University of Michigan figures do move the market quite a lot, but that's more academics. This is a real proper cross-section. So sometimes the market pays attention to this, sometimes it doesn't. So it's one of those that can move the market really fast and hard. Sometimes it doesn't. So just have to wait and see what happens with it. But it doesn't look like the market's really paying much attention to this one. We've got a bit of a rally going on the US at the moment. So obviously any negative impact on the US will be outweighed by the positive moves we've got going on it at the minute. So no, it's not really doing a lot, is it? No news. Nothing exciting. So yeah, I'll just quickly explain what the hedging I'm out of the NASDAQ, by the way, so that's the only trade this afternoon. Still in the FTSE, though. Because it's gone absolutely nowhere all day. So basically, the way it works, let's just pick anything at random. Fine. Just see how I've got it set. Multiplier of range size for trailing stop. That should be fine. True 200. Okay. So basically what it does, which is basically what I've been doing anyway, just wait for that to redo the data. Ready? Nothing is there. Market's just not interested at the minute. Nothing moving. This might take a while to explain because I need to get a hedge. And I need a hedge that actually moves. So what the hell is going on here? What's that there? Let me do it on this account. I don't know what's going on with that, but that's not working. I've no idea. I've never tested this date, so we'll just run it and see what happens. Trouble is trying to find one. Want to find one that isn't a clean break, basically. Oh my God, stop. Tick. There we go. Oh my God, now I'm testing the wrong bloody instrument. Oh, I can't test it because this is the wrong account. I can't really show you, but I'll explain it another day. I can't do the test now because I haven't got it. I'm not set up for it at all. I haven't got an account that I'm logged into. For some reason, this Darwin X account is not working, and I don't know why. It's trading the DAX. 200 fixed lot size. Let's go 0%. Oh, maybe it's because I was doing that. Hang on. I think I might know why it's done what it did. One sec. Let me just try this quickly. Oh, there we go. Yeah, that's right. I had it set up wrong. Right, let's try and get a hedge. So that's a clean break. That didn't work. This isn't working for some reason. It's doing something dodgy, something weird's going on. It's not able to take trades for some reason. I don't know why. That one worked. I've never tested on this account, so I don't know. There's something wrong with the data. Oh no, it's working now. Maybe it didn't have ADR. It probably didn't have enough ADR data. There we go. Right, let's try and find a hedge. There we go. So we're hedged. Right, so we got a long on and a short on. So what it'll do is, obviously, it's automatically moved targets to the, in this case, it's 2R. So I'm targeting 1R and 2R. Yeah. So when it hits that target, I'll show you what it does. There we go. So we hit target. It's put in the aggressive exit order, which is what it does. Yeah. As normal. This is normal functionality. Yeah. So as you can see, that normal aggressive entry is on. So when that triggers, the difference is when it triggers there. Yeah. So it's triggered the aggressive exit. But what it's also done, it hasn't done it. What the bloody hell's wrong with this thing? This data's shot. It's not trading properly. There's something wrong with it. There's something wrong with the data. It's not trading properly. I can't show you, so I'll do it another day. I'll explain it when I release it, if I release it. But all it does, just to explain in a simple term, yeah? What happens right now is when you get hedged, it pushes up, it hits target, it places a sell stop, it gets into that sell stop, and it aims to get you out when the market drops. If the market doesn't drop, yeah, and it triggers you into a short, and then it pushes up, what it will now automatically do is place a buy hedge for you. So it locks in that and that as loss. So it's a minus 2R. Yeah. And then it will place a target 2R above that buy stop. So if the market pushes up, it will get you out with profit. So you make profit there and you make profit there. And then it will re-hedge you again to go short. So it will take 3 shorts. So it's a cross between position trading and hedging. But all you need to know is it quadruples your profit and it halves and it gets rid of all those days. You know those days in the back tests where it goes 15R up? It moves up 300% of ADR because we've had a news event like CPI has been released. Yeah, those days where it makes something in the region of $7,000 to $10,000 worth of loss on a 100K account, that would be. They don't exist anymore because it's hedging. It's putting another long on, so it's actually making more money on those big days and minimizing the losses. So it's getting rid of the. This is the reason I've been working on it, because you get these days in the back tests where it makes catastrophic losses because you're trading news events, you're trading CPI releases with it. If you're trading over CPI with something on a 5-minute time frame, it's going to go mental, isn't it? So it's just avoiding those days basically. But it's good. But I need to test it live, so we'll watch it play out in here basically. Okay, sorry, I can't explain it properly. It's something wrong with the data. I don't know what it is, and I can't be asked to look at it. Champagne, S&P CS Composite 20 HPI year on year. Blah, 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 blah. No idea what you're talking about. Afternoon, David. Afternoon, J Trader. Steve, how are you doing? Thanks for subscribing, Mr. Disker. Welcome aboard. Okay, so if I understand correctly, re-hedge order is placed 1R from the aggressive entry position. Yes. So whatever the ranges that you've taken, when you get into the aggressive, it places that same distance trade as a buy stop. So in case price pushes up, you don't have to worry about it. It's for unattended trading, basically. When you get into an aggressive exit, you have to manually manage it. Because if you don't, it will fly off and you'll just blow your account. So it automatically does that. It's for the people that want to buy a Lamborghini and they want to run the EA on full auto without learning how to trade. It's for those people. Us people that can manually put orders in the market and handle things and move things around because we know what's going on, we don't need it. But it is quite a nice to have, I have to admit. If I want to go make a cup of coffee, I can just walk away and let it auto trade it. It's really good. What if the aggressive entry is not triggered? Well, it doesn't get triggered, does it? Yeah. So if you don't get aggressive entries triggered, it just trails, doesn't it? Exactly what it does at the moment. Yeah. So if you have a hedge, it breaks, hits target, it places that sell stop to get you into the aggressive exit. if it keeps pushing, it just trails the aggressive exit until it does trigger. It will trigger. There has never been a day in history where the market has gone parabolic up and never come down by one candle. That has never happened. It will. You will always get triggered. But when you get triggered, it will now protect that by placing 100% hedge in the opposite direction. It won't for you because I'm the only one that's got it. But it will do. That's the logic. Yeah. Could the aggressive exit be done, say, if you took 2R, it goes 5R one way, then you don't need to wait for a pullback? Could the aggressive exit be done as if you lock 2R and it goes 5R, you don't need to wait for a pullback? You can do what you like within the constraints of what it does. I don't understand the question, Peter. Sorry. Anyway. God, been on for half an hour. We haven't done anything yet. Right, so we watched the news, which wasn't news. So Euro US dollars basically just whipsawed. The US dollars literally whipsawing. So nothing happens off the back of that news. Banked a little bit today on H1M5, down to 13.6% drawdown at the moment. There's a few bits and pieces in profit, nothing big enough to bank at the moment. Everything's just going sideways. We've had a little bit of relief on the yen pairs. The Swiss pairs have had a little bit of a push yesterday, but they've also come back today. So as you can see, we're just not doing anything. It's almost not worth bothering to run live rooms because I'm saying the same thing every day we come in here. It's going sideways. It's not moving. Nothing's moving. The market has just scared the crap out of itself and it's just not interested. It's just sideways. Everything's just sideways. So basically, there's nothing much to report apart from what we looked at yesterday. It's all the same. There are no RSIs. There are no ADRs. The market isn't moving. The drawdown is virtually the same as it was yesterday. I've managed to bank a little bit today because something moved, but that's about it. So all we've had basically today is pound New Zealand. So this was the H1M5 from last... Oh, when was this then? Monday, Friday, Thursday, Wednesday, Tuesday. So last Tuesday. It's taken 6 days to get out of this trade, or 5 days to get out of this trade. That's the movement we've had in a week. We've managed to get a move of an ADR. Well done. And that's only because the New Zealand dollar had a fit and collapsed yesterday. So pound New Zealand's all I'm out of. Everything else just sitting in drawdown. Same as before. This looks bad, but it's only because there's 2 yen pairs in drawdown on it, which make up 10% of that. So I'm in 3.69% of drawdown without the US dollar yen and the pound yen. So it's nothing else worrying at all there. US dollar yen in the same boat as I was 2 weeks ago. I'm there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I can't get stopped out on it. I can't do anything. I just can't do anything. All it's doing is it's hideously killing me with swaps. I've never had this, hand on heart, in all my trading career, where I've sat there and been charged £2,000 for trading. And that's it. I'm a couple of grand in the hole on swaps on this thing. It's just sideways. So still can't do anything with it. Still in it. To be honest, I'd love this thing to rally, and I'd just stop out and take half of that drawdown out of my account, take the money, run, go away, but push this up so that the Japanese get pissed off and drive it down 800% ADR, and I get all the money back. I just need the Japanese to do something. I don't care. Go take me into drawdown. I couldn't give a monkeys. Just bloody do something. It's just not doing anything. So we're stuck. Just stuck, grinding sideways. So yeah, this month is a write-off because we haven't had any movement. We've had no market structure this month at all of any considerable amount that is, working. So yeah, on 4% bank this month, and just waiting for the yen basically. So that's H1M5. ADR. Again, we've not had a massive amount of ADRs this month. Currently sitting in 12% DD. The only thing that's still slightly up where I don't want it to be is pound Swiss. But it's, we're on day 3 now of not having gone anywhere. So this might be starting to turn. We need some news, basically. So up 8% so far this month. There's an absolute bucket load of profit I can bank at the moment, but I don't want to bank any of it just yet, because I could bank a load of this. I mean, I've got 3, 6, 7, 8, 9, 10. Got about 12, 1300 I can bank, which is nice because it's going to, decent amount of money. A bank sort of like 3% or so, and I can use half of that to do drawdown control. But things are just starting to get moving, so I'm just going to monitor the situation at the moment. There's certain things like the CAD yen. All these yens are starting to power up ever so slightly. The thing that worries me is all this news tomorrow with the GDP, the rates, and the inflation for Aussie. This is all going to affect the yen as well. So I'm going to give it until the end of the day and see if we can get a continuation move. But you can see from this CAD yen, this shows you quite clearly how much I'm paying in swaps on these yen trades at the moment. Look how far I am in profit on this. Yeah, there's my average price there. So we've been dropping for 4 hours. I'm sitting in 0.06% of profit on the position. With that much distance of the trade being in profit, the whole thing being eaten by swaps. It's kind of the situation right now where I just want to go, right, fine, take it. I've had it. Just get me out. And yeah, I won't have any money off of you, but equally, I won't go into drawdown on it. But equally, if this yen move continues, market structure, this is why I'm waiting for the end of the day. We're at the lows of yesterday at the moment. We've got a clear high, low, lower high. If we can get a lower low in today and retest that propulsion gap, I can close this out with actually some profit. And it will also reduce my exposure on the yen. But this account isn't particularly exposed on the yen. The main problem with this account is the Swiss franc. So I'm just waiting to see if we get any further moves. So I've done about 7% drawdown control on this. So I'm sitting in 8%. I was up to 16% on the month. I've had to do 7% of DD control just to get on top of these moves. But I'm waiting for the end of the day just to see if we can get a continuation rally on the yen. And I was hoping it was going to kick off in the US session, but we don't seem to have done anything at the moment. But we'll see. So that account, again, nothing massively problematic there. The pound Swiss and the euro Swiss are the main two culprits at the moment, but they are starting to move. We just had a reversal alert. We double topped yesterday's high, limit orders triggered, drove them down, and looks like we might be starting to move. But we've had this kind of move happen before. Yeah. So we've had these moves get started and then they fail and we turn into another 3-day grind waiting for the next news event. So we'll wait and see. But that's that account. There's no ADRs today. Hedging, banked 1.4% today. Again, done sort of 8-9% DD control, up 26% on the month. Nothing to bank there at the moment. Again, waiting. I need 1 day, basically. This tends to happen. If you've been in here with the live rooms or been position trading with me for a while, you'll know that this happens on a regular basis. You come into the live room in this morning, I'm sitting in 8 to 10% of drawdown. Come into the live room in the afternoon, I've banked 5%, 6%, and I'm sitting in 1% of drawdown because the market's moved. We're just waiting for the market to unwind these moves, these profit takes. As soon as they do it, they all happen at the same time, and you just bank an absolute load of cash. I'll be banking 9, 10, 15% in a day, and just getting it all in the bank. But the market at the moment is just stuck. So it's all hideous waiting at the minute, but nothing much we can do with it. So as you can see, from yesterday's lives, there's nothing really changed. We are kind of sideways at the moment and not really going anywhere. So tomorrow I'm on in the morning and the afternoon. So we're going to do 1:15 tomorrow afternoon for the GDP figures. And in the morning, I'll be on for analysis of the Aussie CPI and New Zealand rates. So I'll do 2 live streams tomorrow. But, you know, we're just waiting for the market, aren't we? So I have to sit here and do absolutely nothing until it moves. Evil, I tend to see the glass half empty, so I know it will not trigger for me. It always triggers. When have you ever seen me not have an aggressive drawdown control, an aggressive exit position not trigger? They always trigger. Always. You don't. I've never seen it not trigger. Put it that way. Can't you negotiate a better swap rate with your broker? No, because they don't control swap. The banks do. Swap's nothing to do with the broker. It's interest rates. So you ask the Bank of England to drop the rates down. Yeah, and ask what I would ideally like to happen, which would be perfect, is for the pound interest rate to drop down to something like 2.5%, and for the Japanese to up their interest rates to 2.5%, and then we wouldn't pay a swap. It'd be lovely. But it's nothing to do with your broker. It's your overnight swap. It's the bank rate. That's why you're paying swaps. And the reason you're paying such high swaps at the moment is because the Japanese are -1. And if you're trading something like the US against the yen, that's your overnight rate. 5.6%. You don't have a choice. That's what you pay. It's the different interest rate differential is what a swap is, basically. So we can't negotiate that. US dollar CAD, we can look at that one. So flying up at the moment. US dollar's having a little bit of a push. So coming up to a nice potential high. So this area here, basically we've sold out of that level 3 times now. This is negative news, don't forget. It's all negative news for the US. There's absolutely no reason for the US to be rallying. This isn't the move. This is just a knee-jerk reaction. This will come back down again. So if you get any ADR hits today, but I mean, you can see what it's like at the moment. We've had a news event. Yeah, after it calmed down, we sat for a week. Then we had a news event. After it calmed down, we've sat here for over a week. We're waiting for the next news event. Take your pick. It's literally all you can do at the moment. This is why I use RSI. We're looking for a reason for the banks to move the market. After they've moved the market, there's a reason for them to move the market. They've positioned themselves for a profit take. Yeah, that's what that move is. That's why that trade is there. We can't do anything when they're just flip-flopping up and down like this. So right now, there's just no opportunities on it to go anywhere. It's just sit and wait territory. But yeah, hopefully. I mean, we got news coming up this week. So there's US dollar news every day this week moving forward. So we'll see what happens. But what we don't want is a flip-flop. We'd love loads of negative news or loads of positive news. Either way, as long as they move, it gives us an opportunity to enter and exit the market. But going sideways is just not helping anybody. So I just wanted to quickly cover the new position trading EA and the back testing that I've been doing. Ignore these numbers. I've been testing the EA to make it lose, basically, so that I could test it. So I was trying to get, basically with this account, I set this, the EA is running on, the new position trading EA is running on this account on the VPS. So this is the VPS running, it's running all pairs with the new position trading EA to test basically all the functionality out. So I'm running it on the 5-minute time frame, and I'm just using 60/40 RSI. Oh my God. Why did I change that to false? Okay, just save this. I've just got to restart this. I'll do that in a minute. So yeah, basically this is running the new position trading EA. So I was running on 60/40 RSI extensions just to test the functionality of getting into, scaling into, spacing, all that sort of stuff. And it just couldn't go wrong. So I basically said to the EA, because I wanted to test drawdown control, the automatic drawdown control, which you can see it's done one there. I wanted to test that functionality. And as the market was just going sideways, as we know, I couldn't actually get it to do any drawdown control. So I set it to get out of positions if it got into 0.5% of drawdown, and I got it to risk 1%. So the opportunity for getting into drawdown was virtually guaranteed. So the last 2 days it's been doing that, and it's been working absolutely fine. So this was my final forward test for this. So this morning, I was testing the optimization. So I put a post in the Discord channel this morning about it. And about backtesting in general, basically. So what I did was this new EA has a functionality to optimize for backtesting, basically. So what I've done is I've built in this setting to update the data on tick or on bar close. Yeah. So what happens with a normal backtest is when you run a backtest on tick, the EA, every time the market ticks one tick, it reprocesses the entire code in the EA. Yeah. So every variable gets rewritten. Everything basically on tick all gets rewritten. So it slows down the backtesting. So say for example you've got 10,000 lines of code. Every time it ticks, it runs 10,000 lines of code. If you've got 28 pairs running, you're running 280,000 lines of code, for example. So it's running an awful lot of processing power. So what I've done is I put an option in there to update the data and to run all the calculations every time a bar closes, and given the option to choose which time frame. So I've set it to use 1 minute. So it will only do all the main calculations and the main bulk of all the work every minute rather than every tick. So what that means is within a 5-minute candle, this is an hourly chart, but within one 5-minute candle, yeah, you're going to get calculations done 5 times. So from a testing perspective, what it does is it speeds up the process of testing immensely. But also it unlocks the ability to use control points, because control points use the next lowest time frame, which is also the 1-minute chart. If you're trading on 5 minutes. So if you've got the market reversal alerts EA and you've backtested it, you know it takes absolutely forever to test. So what I've done is I've recoded this version to basically use this new functionality, and a lot of it works on bar close anyway. So what I've done is 4 different tests using 4 different settings to see what the difference in results is. And the most important point here is that the difference in results is virtually nothing. Yeah. So the difference in time, if I pull up the Discord channel here, yeah. So when I was testing it, every tick setting using 1-minute candles to update the data, without using 1-minute candles to update the data took 15 minutes. This is a 4-month test. So it's testing 4 months worth of data on a 5-minute time frame. It took 15 minutes to run that test. So if you extrapolate that out, it's taking around about 45 minutes to backtest a year. Yeah. On one instrument. If you then use the every tick setting, which is your super high quality setting, using 1-minute candle data, it took 4 minutes. Yeah. So around about 4 times faster. If you then use control points, either with or without 1-minute candles, because they both do pretty much the same thing, it takes roughly 20 to 25 seconds to run that 4-month test. So the important thing is, yes, there's a massive difference in speed. So we can test 4 months in 20 seconds, or we can test 4 months in 15 minutes. I know what I'd rather be doing. Yeah, especially for optimization. So the important thing to understand is are you going to get the same results? Because there's no point in using a setting which does all the work in 20 seconds. It gives you a load of crap. Yeah, it could just be doing anything. Yeah, it's not real life. It's not real market conditions. So I ran all 4 tests to test what happens. And as you can see here, this is tick data with no optimization. It made $1,026 profit over 88 trades with a drawdown of 17.3%. The same test using control points with no optimization produced 1,072 over 87 with 16.7. So the difference in profit is $50. The difference in the number of trades is just 1. And the difference in the drawdown is less than 1%. So there's less than 1% variance in the difference between running that setting and that setting. The difference in time is 20 seconds or 15 minutes. Yeah, so this is 36 times faster testing than the Market Reversal Alerts EA, which is a massive game changer. This is control points with optimization turned on, 1,076, 87 trades, 16.74. That one is 1,072, 87, and 16.74. So those two results, there's like $4 difference between the two. And then tick level with optimization, 1,143 profit, 87 trades, 17.35, compared to the non-optimized version, 88 trades, 17.39 and 1026. So there's $100 worth of difference. So this one's actually got a 10% variance in profitability between the two tests. But the outcome of all of this testing that I've done this morning is there's 4 completely different tests. One of them using a 99% accuracy, one of them using control points, which is completely, usually really crap, and they give virtually the same result. So it means that we can backtest using control points in here. Yeah. On the pound US dollar or whatever pair you want to, on the 5-minute time frame, and you can get, I think I put it in the group. Yeah, you can get a 5-minute test, a 5-year test done in less than 3 minutes. And that's this test here, which is, I have to rerun it, but I don't want to do it in that mode. So not in visual mode, obviously. So you can run a test over 5 years in 3 minutes. So within 2 hours, you could backtest every single currency pair, all 28 FX pairs, over 5 years, get an export of each of those, stick it into Quant Analyzer, have a complete portfolio of position trading on every single pair over a 5-year period, and be able to see the exact equity curve you would have achieved for it as well. So it's going to be a massive, massive difference for those that like backtesting, me being one of them, just to get robustness data out and sort of test how effective it is. But you can also see as well, very clearly over a 5-year period, where the main squeezes are as well. And this is the other beautiful thing about this test with control points. You can see how many times you would have been squeezed. This is actually using automated drawdown control and automated aggressive drawdown control as well. But it shows you, you'd have had a squeeze there, a little one. You'd have had a little squeeze there. You'd have had a fairly big squeeze there. So in 5 years, you got 3 squeezes on one pair. So again, for backtesting purposes, this is the pound US dollar. If you tested all the other majors, the US dollar CAD, Euro US dollar yen, US dollar everything, if you can see that the squeezes are all in the same place, that shows you how important exposure is. Because if you had a squeeze of 15% on an individual currency and you were trading 6 of those, that would have turned into pretty much an account blow, wouldn't it? Yeah. This is only trading with 0.3% risk or something. So it's a very small risk. But as you can see, obviously, it's, you know, as we know, position trading, it works. We've been doing it for years. It's profitable. So, but it allows you to analyze. This EA will allow you to analyze data and do back testing for your confidence, really, so much faster. So yeah, there's 1 squeeze, 2, 3, 4, 5. So 6 squeezes in 5 years. as I keep saying in here, well, if you're regular, you know, but you're going to get squeezed. It's going to happen. Yeah. And it happens to me usually 2 to 3 times a year. And you can see them on the chart, which is fantastic. So there's another one, 7. But these, you know, these, I call them squeezes. I mean, they're not particularly huge squeezes, are they? Also, you can see stagnation periods using automated drawdown control. So you can see for a period of a year, and this is what somebody's, you know, we've been saying in here about this yen squeeze that we're going through at the moment. People saying, oh, I'm not going to trade the yen anymore. You would have had that result on the pound US dollar over that period of time. It stagnated. It didn't make you money. Does that mean you're never going to trade the pound US dollar again? Of course you're not. Because 3 years up until that stagnation period where the US dollar, pound US dollar didn't really make much profit in the year, it made a load of money. And it's making money this year as well. But just because you have 1 year where something, you look at it and go, oh, it doesn't work. Just because it doesn't work for 1 year doesn't mean it should be excluded from your portfolio. This is just one of 28 FX pairs. If one of 28 FX pairs goes sideways, let's say 5 of them go sideways and don't make any profit, but don't make any loss, you've got the other 20 which are making you money. Yeah. So it's going to be a real game changer, I think, for a lot of people that moan about, and quite rightly, about the backtesting speed of the MRA EA. It's just too complicated. And this is kind of why I wanted to build the simplified version so that we can backtest all of this. And the fact that it's now got automated aggressive drawdown control as well, so that it will automatically do drawdown control when an individual instrument reaches a certain percentage. So I keep saying in the bootcamp, you know, everybody's got a different comfort level. If your comfort level is 3% and you don't like it when an individual instrument goes into 3% of drawdown, set that in there and it will automatically do aggressive drawdown control using stops for you. While automated partial drawdown control using the profits on the portfolio as things get squeezed. So it does, this is simulating, if you like, real world, what we would do in the real world during a squeeze. We would be shutting positions down. Yeah, exactly what I'm doing at the moment on some of these ones which are squeezing. I'm closing them. Yeah, got to get out of some of this stuff. Trying to find one that I've been doing drawdown control on. US dollar yen, haven't I? Yeah. So it's simulating, you know, all this automated. This is me doing manual drawdown control. Yeah, that's an aggressive drawdown control position that failed. That's an aggressive drawdown control position that worked. That's a drawdown control being done using the profits of that. That's all simulated in that profit curve. So all you've got to do is run that. Yeah, go into results, save that for every pair, chuck it into Quant Analyzer, and you'll have a perfect portfolio equity curve. It's going to be good. But yeah, so I've been running that all morning, as well as the SOH stuff. So it's all good because there's nothing to do here apart from sit and watch. Look at this yen. Well, it's not, it's the US dollar having a bit of a rally. So Euro US coming down, pound US coming down. Again, one of those, probably one of those tomorrow. As I say, I don't care which way the US dollar goes. Just make your mind up. Go one way or the other. We just want that US dollar yen pushed somewhere. We either want it out that high so the Japanese do that, or we want you down there so the Japanese shut up and everybody starts to buy the yen. Just make your mind up. I don't care which. Thanks for subscribing, Easy Guide. Welcome aboard. Is that orange box the reversal already that you've added to the new EA? That orange box, the reversal. No, this is the market reversal alerts indicator. In here, this is nothing. This is the market reversal alerts indicator. This is nothing to do with the EA. If the EA will do aggressive drawdown, what about overnight swaps? There's nothing you can do about overnight swaps. So this cost of doing business. It's not. It won't automate. It won't move your stops. No. If you want to do that, you need to do it yourself. Yeah. This is not a set and forget tool. It can be. If you want it to be a set and forget tool, that's what would happen to you over the last 5 years. You'd have made 40% on that one instrument. Multiply that by 28. Work out how much money you would have made on full auto without touching it. You can do better than that. There's only so much you can automate. I can automate absolutely anything, but it's not right to automate everything because it's a dumb bot. Yeah. I'm not a dumb bot. I know what I need to do. I can tell it to do something, but I don't think that's the right decision every time. When we're sitting in conditions like this, where you're sitting sideways on stuff, the decision's got to be different. Yeah, if I've got something that is constantly going like that, I'm going to constantly take it off. Yeah, because we need to make money. Look at euro pound. Yeah. I took that off, that off, that off, that off, because it's just doing that. The EA, I could teach it to do that, but that's not the right thing to do every time. This is the right thing to do in a ranging market, but how do you define a ranging market and how do you define a trending market? Some people will look at a chart and go, that is range bound. Other people will look at a chart and go, that's trending. What is it? It's discretionary. That's what it is. So you make your own decisions. You can't teach an EA to do everything. It's not clever enough. No EA is ever going to be clever enough to make those decisions. So I can get it to take things off. I can get it to put things back on again. At the moment, I've got controls in this version to not do anything between certain hours. So for me, I've got it set up so that between the hours of 1 a.m. and 11 p.m. trade for me. But I do not want you taking trades after 11 o'clock. I do not want you doing drawdown control after 11 o'clock. I do not want you doing anything before 1 o'clock in the morning. Yeah, so that Goldilocks zone where the brokers piss about, I'm not interested. I'm not doing anything. This is not doing anything. Literally nothing. It will have a stop loss in place if there is an aggressive drawdown control position on. It's your choice what you do with that. I could say remove the stop loss there and put it back on there. But if there's a news event at midnight 30 in Australia and this thing's up there, I'm not responsible for that 7-hour loss you just made. I'd rather have the stop loss and I'd rather be stopped out than risk it. Yeah. But again, you know, 12:30 tomorrow, we got CPI. Yeah. So your broker is going to be highly liquid at that point tomorrow. Normally they would be highly illiquid at that point, but tomorrow morning they're going to be very liquid. So there's no rights and wrongs or anything. It's just you've got to do what you do. Trade. What I said, US dollar strength. Yeah. Well, we knew that, didn't we? Because it was going up when you said it. It doesn't take a rocket scientist to see a candle going up and to say it's US dollar strength. You're acting like a currency strength meter. You're stating the bleeding obvious. Where's the latest currency strength gone? Did we not have one this morning? Oh, there we go. Yeah. New Zealand dollar's weak. Really? Go and have a look at a chart. Are you just having a look to see the difference between entries from the reverse alerts and MA? No, I mean, I'm not looking. I'm not comparing anything. This has just got it's just got them both on a chart. The new position EA, it'll be doing MT5 version. If it works, yeah. Might do. It's not my priority. People need to switch away from MT5. They really do. It's utterly shite. With the SIHEA, with the re-hedging update, you also will have the update version MT5. Yeah, if it works. Tommy, you have to understand, if I had a choice, I wouldn't even develop for MT5. Less than 10% of people on the planet use it because it's crap. It's buggy. It's crap. It's slow. It does things differently to MT4. You'd go and backtest exactly the same thing on MT4 and MT5, you will get wildly different results because MT4 is awesome and MT5 is shit. I would rather just not touch it with a barge pole. Yeah, every time I code something, it doesn't work because it's MT5. It's broken. It doesn't work in the same way. So I will, yeah. But if you've got the MT4 version, it'll be out tomorrow. If you've got the MT5 version, sometime in the next 6 months, if I can be asked. Seriously. I will update it, yeah. I'm kind of hoping they drop it because they don't sell anything for MT5. In comparison to MT4, 90% of sales of MetaTrader licenses, MetaTrader products, indicators, EAs, everything is on MT4. Why they keep flogging this dead horse, I do not know, because people do use it, 1 in 10. But I don't know. It's just a very, very, very annoying thing. MT5. Its existence annoys me, but I can't do anything about it. How will the breakout entry work on the new EA? I don't know. Haven't thought about it yet. It'll be the opposite, basically. So when you get a signal, it will take the opposite. If I do it, I'm not sure I'm going to do it yet. It's another strategy, basically. Don't forget, this is a random thing, yeah? So when you get an ADR, so let's look at an ADR. Yeah. Aussie dollar, New Zealand dollar. So we had an ADR hit today. What should you have done there? Go long or short? What's the odds of it going up or down from that point? 50-50. So if you get an ADR hit to the upside, there's strength in the market. Go long. Wait for it to pull back. Add. If there's a push in the market, go short. If it works, brilliant. If it doesn't, add. Just because it's hit ADR, it's telling you it's moved beyond its average range. Should you be buying it or selling it? See what I mean? It doesn't matter. You pick any indicator on the planet, right? When the indicator gives you a signal, you could either press the buy button or the sell button. The odds of that trade working off that signal are the same. Yeah. Look at a MACD or an RSI or CCI or a stochastic. When it gets extended above that level, what's it telling you? The market is rallying hard in that direction. What should you do at that signal? Ask 2 different people, you'll get 2 different answers. Someone will say, oh, it's massively rallying, I'm going to buy it. Some people will say, it's massively rallied, I'm going to sell it. Are you a breakout trader or are you a mean reversion trader? The signal is exactly the same for both strategies. So all I can do is flick a switch in an EA and say, when RSI is extended above the 80 level, buy, don't sell. What will happen is you'll take a breakout. That will either be a false breakout and you should have mean reverted it, or it'll be a pullback and push and you are right. Yeah, look at these positions that I'm in at the moment on H1M5. Why am I in these positions? Because it was extended above the hourly RSI. Was it the right thing to do? No. What would you have been better doing? Taking the breakout. So you would have missed out on that and you'd have made money on the ones that are in red. If you'd have taken the breakout, you'd be in red on those where I'm in green. It's just the opposite. The odds are the same. ADRs are the same. If it gets an ADR hit to the upside, buy it. Because it's breaking out. They're going long. they are likely to pull back on that before they put a new leg in. But this is, this is the thing, isn't it? With anything in trading, if this is everybody's looking for the indicator. Yeah, people recommend, you should use this indicator if you want to do that. Why? What's an indicator telling you? What's happened? How is that going to help me moving forward? I can see it's happened. It's like the relative strength indicator, or the one I just showed you on financial juice, the currency strength meter. Hey, currency strength says that the yen is really strong and the New Zealand is really, really weak. I know that. I can see it on a chart. How does that indicator help me predict the future? It doesn't. It's hit ADR. It's going up. What's it going to do next? It's either going to carry on going up to 200% of ADR, or it's going to come back down. Just because it's hit that line doesn't mean anything. It means it's hit that line. Hey, it's crossed above the 20 moving average. Excellent. What should you do? Buy it because it's a 20 moving average crossover. No, sell it because it's moved up above the 20 moving average. Who's right? The person that benefits from the next move the market makes in the future that you don't know. No indicator is going to help you with anything in trading. It's got nothing to do with it. An indicator is a way of entering the market or exiting the market based on the signal that gives you. It doesn't help you predict price movement. Does it? So all I do with this EA, is if I set it up to say, use the ADR, it's called the ADR reversal strategy, but I could change that to be the ADR strategy. And there'll be a button there that says mean reversion or breakout. So the ADR strategy is when you hit ADR, if you've selected breakout, it will buy it. If you've selected mean reversion, it will sell it. It will either push up then to 150% of ADR. And if you're in mean reversion, you will take a second entry. If it pushes up to 150 ADR and you've taken the breakout strategy, you will exit. I don't know which is going to happen. Neither does it. Same thing. Doesn't matter, does it? Flip a coin. You've got the same odds. But I will still use a moving average cross to get in. So, for example, if I was going to use the ADR as a breakout strategy, when it hits ADR, we wait for price to pull back down, and then we wait for price to break back above a moving average, or we wait for price to give us an M pattern or a W pattern, a reversal alert. It's the same thing, basically. So what would happen is it would hit ADR, you wait for it to come back down below ADR, then you wait for it to cross back up to go long. Because if that ADR is part of a market structure breakout, you are right to go long. If you're mean reverting, you make profit on that. If you're taking the breakout, you make profit on that. Exactly the same signal, but you just trade in a different direction. Makes sense? So you don't need, I could put into an EA, I could build 1,000 indicators into there. They're all going to do the same thing. They're going to give you a reading and give you a condition or give you a signal to press a button, which where you press the button is irrelevant. There are higher odds if something's pushed above 90 RSI. There are much higher odds of that thing coming down than going up. However, it could go sideways, RSI resets to 50, and then it pushes again. That was the wrong thing to do. That was the right thing to do at 90 RSI. But what happens when you get to 90 RSI, we don't know. Price action is king, yeah. Exactly. Will the EA still wait for an entry setup? Yeah. Yep, it's exactly the same. You won't get into any trades without a signal. Every strategy has to have four things. Every strategy on the planet. If it hasn't got four things, it's not a strategy. Yeah, you need a condition, a signal, a target, and a stop or a backup plan. Yeah. So with H1M5 mean reversion, RSI extension, reversal alert, condition, signal. Target, backup plan is either stop loss, I'm getting out, or wait, enter second position. Yeah, that's every strategy on the planet has to have those four things to be a strategy, because you cannot just get in because an indicator is triggered. What that means is the market's been moving up and down. Why would you take a trade because the market's been moving up and down? That's the point. We know it does that. It's what it does all day long. It's its job, is to move up and down. It's like saying the sun's job is to go up and go down and go up and go down every day. We know that. So is the market. Yeah, just because something's gone up and down doesn't mean anything. There has to be a condition in the market that is unusual before you take a signal. And that is what condition indicators are for. Usually oscillators, RSI, stochastic, CCI, MACD, all those sorts of things. Those are condition indicators. They show you what the market has been doing for a prolonged period of time, moving averages, that sort of stuff. The signal is we have somebody on our side in the direction that we would like to trade based on the condition that we have identified in the market. Yeah. When we get into the trade, if the market doesn't do what we want it to, we need a backup plan, which is either a stop loss or a scale in. And we need a target where we think price is going to achieve. That's a strategy. So you always have an entry based off of a signal. Why am I making that EA if you have the market reverse alerts EA? Just to simplify it, basically, and to speed up backtesting. And also so that I can trade using buttons. It's for me, basically. Do all the stuff that I wanted it to do. Because the market reverse alerts EA is just overcomplicated. It's an overcomplicated mess. It was a really, really good thing when I built it. And then I built thousands of functionalities into it for people that wanted stuff, and it just got too bloated. So now it just takes forever to run. Nothing wrong with it. I will still be trading with it. The strategies are sound. I've been trading them for years. I'm not going to stop. But this will be, for me, it's a backtesting tool, and it's a simplified version of my strategies. So it's literally a case of you pick one. Pick, what do you want to do, RSI or ADR? Yeah, that's it. Press start. Let it do its thing. That's what it does. This is what it does. You know, we know the strategies work because I've been trading them for years. It's what I've been teaching for years. We know they work. People just get the market reverse alert CA and they just bombard me with, not me, but the group, me, it's just too complicated for people. So I just want to simplify it, and I can't simplify it because it does what it does. If I strip out all the stuff that makes it overcomplicated, half the stuff will not be there, and then people will go, well, I use that. Well, it's got an off switch already. Let's just leave it off. But it basically does the same thing. If you've got the market reverse alert CA, you wouldn't need this. What I would like to do is replace the market reverse alert CA with this, because it's position trading. My strategy is not the market reversal alert strategy. I am a position trader. Yeah, I trade positions in the market. Market reversal alerts indicator is a reversal in structure indicator. But you could position trade using support and resistance. So on this chart right now, when this gets down to this line, you would want to go long. Yeah. So press that button or that button when it gets there, and it will get you long. Not using that, not using ADR, not using any other indicator, just using pure price action at support and resistance. You want to go long. Okay, brilliant. Press that button and it will go, okay, we're long. If it moves down, I'll manage this position for you. There's no indicators used in the entry. It's just, I bought it because it hit a support. Can't do that with the market reverse alert CA. People are trading, position trading strategies, not using RSI, not using market reverse alerts. They're using Bollinger Bands. They're using all sorts of stuff. People contact me all the time wanting me to automate strategies for position trading, because there's 1,000 ways to do it. You could flip a coin basically right now and I could go short. Okay, we'll sell it. It's not going to, okay. Yeah. So now what it's done is it's gone, okay, you're short for whatever reason. There is no reason. I've just short. But what it's going to do for me is if it pushes up, it's going to take another short because it's going to turn this into a position. If it pushes down and it goes 0.25% into profit, it will get me out of that position. All I've done is press a button. But this is position trading for me. So it's taken over from me, so I can now go off for the week and know that when I come back, this will either have made 0.25% profit or 0.5% profit, depending on the number of trades it's taken. And the EA will have managed the whole thing for me. But the reason for pressing this button does not have to be based on this, and it does not have to be based on that. It can be based on you flipping a coin or asking your wife whether you should buy or sell something at random that you've picked out of thin air on any time frame you like. You could see something skyrocketing. So let's take this US dollar CAD. Yeah. So we've seen this thing skyrocketing. So I could say, oh, this looks like it's probably going to come back down. Let's put a sell stop in. Yeah. And what it will do now is it will sit there with that sell stop. And if this continues to push up, it will trail that sell until it doesn't, because you've asked it to go short. But if it's not going to hit this, it will move it up for you and it get you in later. And then it will manage the position for you. You won't have to worry about it. And you can move, it's just literally it's a button. But this is what's missing at the moment in position trading with the market reversal alerts. Yeah, you can't do this type of thing. I've just seen a double top bounce. Yeah, look at that. Last week's high, we've pushed into it. Limit orders have triggered. The banks have sold again from that level. Is this going up or down? I think it's going down. I've got an order there. If it continues to push up, I will continue to be short until I'm short. When it triggers the short, it will then manage the position for me. If it doesn't work, if it does work, it will get me out when I get into 0.25% of profit, because that's what I've set. I could say get me out when I get into 0.5% of profit, but if you don't need to take 2 trades, I want you to get me out when I'm in 0.75% of profit. And if you hedge me by going long and short for some reason, because I've asked you to get in on RSI as well, I want you to wait until I'm 1.5% in profit and get me out of the whole thing. Can't do that at the moment because it doesn't do it. That's why I built it. As a long answer to a very short question. The manual entries lets you trade breakouts anyway. Yeah, exactly. So you can use it however you want. If you're trading something like the euro pound, yeah, and you see this breakout here and retest, and you fancy going short, hit that button and it will get you in short. Or just hit the market button and it will get you in short immediately. But if you're wrong and it isn't a breakout and it pushes up into there, it will get into a second entry for you and scale out the position. It's just it's just a position. This is why it's called the position trading EA, not the market reversal alerts EA. It's got nothing to do with market structure. It literally just manages a trade for you by scaling in and out of the market in exactly the way I teach in the bootcamp. It just doesn't necessarily need to use the indicators that I personally use for the strategies that I developed, because that's not how everybody's doing it. And this is exactly what I enforce in the bootcamp is you do not need my indicators to position trade. You do not need my strategies to position trade. You can use a Bollinger Band. Somebody's using a really good Bollinger Band strategy on the hourly charts at the moment and doing very well with it. They're literally taking Bollinger Band extensions. But if you look at a Bollinger Band extension, you'll find that there is a very tight correlation with an RSI extension. Why? Because a Bollinger Band measures a standard deviation from the average. An RSI measures as a deviation in strength, relative strength. When the RSI gets extended, price is accelerating. When price accelerates, it goes outside of its standard deviation. So they get very, very similar signals to me using the Bollinger Band indicator. Why? Because they're both oscillators. This is just an on-chart oscillator. This is an off-chart oscillator. They both measure market condition. The signal is when it closes back below the Bollinger Band. My signal is when we're extended above that level, wait for a reversal in structure. It's the same thing. Is the person trading Bollinger Band better than me? Just getting in when something's happened. What happens after that? They've no idea either. But I just want to make something more flexible that I can come in, we come into the live room, don't we? And we go, Let's have a look through all the pairs, and we'll be flicking through the pairs, and I go, oh, look at that beautiful double bottom. We've got a lovely 3-bar reversal formed at a support, but RSI is at 42. That looks like it's going to bounce. I'm not going to take it, though, because it's not my RSI strategy. Screw it. Let's go. If it doesn't work, we'll position trade it. Can do it now. It's going to be great. Could also get you into a lot of trouble. What's the reverse alert based on? There isn't. A reverse alert is a reversal alert, Marion. That's a reversal alert. That EA uses a moving average crossover. Nothing more complex. Think about what a moving average crossover is. Right, so we just had a moving average crossover there, yeah? This candle here has just crossed above that moving average. I don't even know what that moving average is. It's a 15. It's a 15 smooth moving average, that is. Random MA on the chart, yeah? So that's just moved above there. What's that telling you? Price has moved up. We know that. We can see it's been moving up for 15 minutes. But what that does, that candle opening below that line and closing above that line, shows you that there's been strength in the market. If you're a mean reversion trader, you're waiting for the people that have driven the price in one direction to give up, and the people that you want to be on board with you get on. Whether you use a moving average, a reversal alert, a Bollinger Band close above, what other indicators could we use? Parabolic SAR. You could use a parabolic. People use parabolic SAR as we'll get out of trades when it closes above a parabolic SAR. Use it as an entry signal. All it's doing is it's telling you that it was coming down, now it's going up. Is it going to continue to go up? Don't know. That doesn't help you with that decision because it's told you that it's gone up. I know that. I can see it. The fact that you've signaled it's gone up means it already has, and I've missed the start of the move. Every indicator is telling you what's happened in the past. There's a market reversal alert there that's told you what? Sellers are on board. I know that. From that point on, the sellers have been on board. That's just confirming it for me. That is a confirmation of the confirmation. But by the time you've got the confirmation of the confirmation, you've missed that much of the move. With a moving average crossover, you miss that much of the move. With every single, you miss some of the move. If you get a push, pull, 3-bar reversal, you've missed that much of the move. You're never going to get the top and the bottom of a move. It's impossible. It's not impossible, but you might do it once a year, maybe. I've done it once. But yeah, so it doesn't matter what you use, does it? A moving average is as good as a reversal alert if you're not looking for an accurate entry. And I'm not looking for an accurate entry. Don't forget, I'm trading hourly RSI extensions. It takes a day for it to get anywhere near a signal for me. That signal there took a week to get to that, or that condition took a week to achieve it. Doesn't matter how you get in. Flip a coin. The new EA will work on RSI or ADR. Yeah. Can't set it for both, no. If you set it for both, it will take 2 trades. It will trade twice. You could do, I mean, yeah, you could do, but it will trade twice. Auto strategy entry, use only one. Pick one, ADR or RSI. And the reason I've done this and not one or the other is you should be trading different strategies on different accounts. You need to be able to monitor and segregate your strategies, because otherwise you'll get into a trade and you go, why did I take that trade? You need to know why you took that trade. So everything is, you're either trading RSI extensions or you're trading ADR extensions. If you're trading manual, have another account. Because if you let's say, for example, you've been trading successfully for 3 years, all of a sudden you use this product and you blow your account. Why did you blow your account? Well, I don't know. Was it RSI didn't work this year? Was it ADR didn't work this year? Did you just take a load of stupid trades with a button? You need to know. You can't just stick trades on an account. You've got to have everything separated out. You need to know what's going on. It's important. H1M5, not having a great month. ADR reversals, having an okay month. Hedging, slamming it, always does. Yeah. But if this has 3 bad months in a row, I know that the RSI strategy is having 3 bad months in a row. If ADR in that same period is absolutely killing it, brilliant. If everything was on one account, I wouldn't have a clue what's working and what's not working. What needs tweaking, what doesn't need tweaking, all that sort of stuff. You've got to be able to segregate everything out. So same as always, you trade each strategy on each on a different account. Just seeing if there's any other ADRs. It's not the only one we've had today. But again, you know, let's say, for example, this is a good example. Let's say that line there is 100% ADR, not 125 today. And you saw it move up to this line here, which is yesterday's high, and put in a lovely big reversal like that. Yeah. You can hit the sell button now and go, this looks like a double top bounce. If it's not and it pushes up further, it's an ADR extension and you just got in a little bit early. But now it's above ADR, so we'll take another entry, yeah? Just gives you more flexibility into how you position trade. Is there any chance the EA could be available at the beginning of March? No. The 27th today. It's the end of March on Thursday. It'd take me 2 days to write the manual. Gotta go. Okay, I'm not going. Evil's going. Afternoon, Evans. Right. I think, in fact, to be honest, I probably will go. I'm out of everything apart from the FTSE on the indices today, so can't get out of the FTSE. DAX are banked 150 this morning. NASDAQ I just got 40 out of, so there's 112 hedge on, so I'm up 180 with a 110 hedge, so tiny little profit today. I might actually change this account over. I keep saying I'm going to do it, but I haven't got around to it. Now I've got the auto re-hedging facility. The reason I haven't wanted to push this strategy too much is because I can't babysit it much. So now I've got auto re-hedging built into this. I might stick some more money into it and look for this 1R, 2R variation on the strategy and try and use that because people seem to be having very good results with it. But I want to kind of backtest it a little bit more first. But so yeah, so nothing much moving on the indices today. And, you know, not a huge amount of movement on anything else. We've had some US dollar volatility today, but that's all the news done now. So Australian dollar and New Zealand dollar are the focal point for tomorrow morning. So on at 8 o'clock tomorrow morning, we'll be looking through how CPI and the Aussie rate has affected everything. That there is a possibility of that changing tomorrow. I don't think it will, but they have indicated in the past month that if they need to, they may well use that as just one more push. So there is a possibility of New Zealand dollar strength. Obviously, the CPI figure is forecast to go up for the Australian dollar. If we do not get that figure and it's a lower figure than expected, the Aussie is going to come down. So if they keep that as it is and the Aussie comes down, both the Australasian pairs could drag down tomorrow morning. So anything you've got in profit in your P&L on Aussie or New Zealand, it's worthwhile just banking because you can't get it back, but you can put it there. That's not a lot of money at all, but I mean, it's 0.15%-ish, not really even worth bothering with. So if I've got singles on or high exposure, I would probably start doing things. But as I've got one long, one short on the Aussie, and I've only got 3 New Zealand shorts on, I'll probably leave everything as it is at the moment. But that's that account, obviously. If there's other accounts which have got more exposure on the Aussie, that one hasn't either. I haven't really got any exposure on, but hedging probably will have, yeah, loads. So, you know, stuff like this, that's 0.5% profit sitting there. So something like that, I would bank prior to the news, because if that basically, that short works out, these 3 are going to go into profit. But if it doesn't work out, I don't want that going into drawdown. I want it banked. Yeah, they will go into drawdown anyway. We can add that position back on. So just bank anything Aussie, New Zealand that you've got in half decent profit before the news, because you can't get it back. And then we'll see tomorrow morning how that's gone. Peter, so then if having separate accounts for manual entries is the best, have a separate account as well? Yeah. I would always keep my strategies separate. So a manual trading strategy is a manual trading strategy. It's discretionary. Yeah. So if you're trading RSI mean reversion, you are trading RSI mean reversion. Everything on that account should be RSI mean reversion based. Yeah. Same with ADR. But there's nothing wrong if something pushes up and you get a nice reaction off of a level, but the reversal alert is down here and you would not get an entry because it's too close to a previous position. There is no problem with adding a manual trade in to that already taken position, but the initial trade should be taken because of the condition that you've set. But you know, we find often we're like, why did that not take another entry? Because the reversal alert happened down there and it was 1 pip short of being allowed to take a reversal alert. 1 pip. I'm taking it. I'm going to do it myself. But I wouldn't just go, let's just jump into this. So have another account, and it's an amount of money that you would use for discretionary trading. And if you're going to use discretionary trading, it's got to be based on a strategy. So if I were going to use discretionary trading, I would literally trade monthly and weekly support resistance bounces, because I don't need any other strategies. The strategies I've got work. But if you wanted to trade a Bollinger Band strategy, you can do it. You can turn it into a position trade if you want to, but keep it separate. If you've got a Bollinger Band strategy, for example, use the Bollinger Band strategy on an account that trades nothing but Bollinger Bands. Don't start sticking all the other stuff in there, because you won't know what works. You've got to keep a log of everything that works. Yeah. If I suddenly, let's say we come to June, yeah, and I'm looking through my account statements and I'm going, H1M5 is break even by June. Yeah, I know that H1M5 is not working. Why is it not working? I need to look at this. Something isn't right. And it might be that it will be that the market conditions changed and it doesn't suit mean reversion. If ADR is banking, I can go, brilliant, that's always working. If hedging's banking, I can go, brilliant, that's always working. But I need to know, why is this account not generated alpha? Why is it not generating revenue? Yeah, you've got to be able to know that it's because the H1M5 strategy isn't profitable. So, Jow, I trade Bollinger H4, yeah? There's nothing wrong with Bollinger Band. All Bollinger Bands are a condition indicator. They tell you when the market is stretched. Same as RSI does, same as ADR. There's no right or wrong indicator for measuring market expansion. That's all it is. When RSI gets extended, it means there's been a big move. Look. Yeah. That's all it means, isn't it? So you got that move there. Let's stick a Bollinger on there. Have a look at it. Oh, I need to make that a bit. Yeah. Outside the Bollinger Band, RSI it's extended above the 70 level. It's also hit ADR. Yeah. ADR, RSI, Bollinger. Same thing. Market condition. Market condition. ADR is 48. So that's 30. So that got down to 60. So you'd have had a Bollinger Band entry there to go long. Worked out the next day. Didn't really work out that one because the mean was the same price. So that would have been a fail. But there's no other entries on that chart. Look. There's an entry there. Shock horror. Same signal. So all this does is it tells you the same thing. The market is trading outside of its norm because it's had a large move. What comes after a large move by the banks? A profit take move. What are you doing? Mean reverting Bollinger Bands. Jumping on the profit take move with the banks. What we're doing with RSI H1M5. Jumping on with the banks. What we're doing with ADR reversals. Jumping on with the banks. What are you doing with Bollinger? Jumping on with the banks. What if it doesn't work out? Add another one. I've said it in here before, and I'll say it until I'm blue in the face. You can turn any strategy on the planet that you've ever learnt in the past, however long you've been trading, you can turn that failed strategy that doesn't work into a profitable strategy by doing one thing. Remove the stop loss. Because that strategy is one of two things. It's a breakout strategy, which either takes momentum breakouts or initial breakouts into trends, and it turns into a trend strategy, or it's a mean reversion strategy. It waits for a condition in the market to be hit before it enters a signal to trade the opposite direction. There are only two strategies available to trade on the planet: breakout and mean reversion. Whenever the market moves, you are either getting with the market or you're getting against the market. You are either breaking out, looking for a trend, or you are mean reverting that breakout, thinking that the move will fade. There's only two things you can do. Whichever one of those you decide at that point, whether you've chosen to take the breakout or you've chosen to mean revert the breakout, the odds are the same. Doesn't matter what you do. Doesn't matter which indicator you use to do it with. Doesn't make any difference. The way you make money by trading is not by picking the right indicator or picking the right version of a strategy. It's what you do after you press that button. That's what position trading does. Gets you back into a profitable position after you've pressed the button if you're temporarily wrong on a trade. Nothing wrong with the Bollinger Band. I love Bollinger Bands. I used to trade Bollinger Bands. I used to trade Bollinger Bands in stocks as well. Quite successfully, but I got stopped out a load, which is why I dumped it, because I've been on the same journey as I preach about in here all day long. The system hopping journey, which is what everybody does. You system hop all the time. That's why there's 50 people in here now. Yeah. Over the past 2 years, I've probably had 20, 30,000 people in this room, individuals. I've got 50 of you in here. Where's the other 2,000 or 3,000 or 20 or 30,000 or however many gone? Off to the next system. Why? Because they didn't like this, or they didn't work for them. Because they didn't give enough time. Works. But they've gone looking for the Lamborghini, haven't they? Not going to find it. They have already found it. Yeah, they found the Bollinger Band strategy. Just showing you a strategy that works. Look, it's only had 2 trades on this chart, both of them 100% strike rate. But what they'll do is they'll take the next one and it will go like that. And it will stop them out and they'll go, that's crap, and move on to the next thing. RSI. No, I can show you 100 times when the RSI didn't work. Yeah, I can show you 100 times when the RSI didn't work as well. But I didn't make money because the RSI didn't work. When the RSI didn't work, I made money when price came down. This thing was just why I got in. The way that I managed it afterwards is why I made money. Not because of an indicator. It doesn't work that way. It's not how you trade. You trade the market. You don't trade an indicator. Just tells you when to get in, doesn't it? Use bollies. They're good. Nothing wrong with them. I could build Bollinger Bands into, into this thing. I could put in here auto strategy, Bollinger Band strategy. Yeah, but it's not going to be any better than that one or that one. It's just another one. Whether it works or not doesn't matter. And then I'm getting into the realms of where do you stop? Do I introduce CCI, MACD, stochastics? There's thousands of indicators. I could stick them all in here, but they're all going to give you the same result. Sometimes they will, sometimes they won't. None of them are better than the other. Which level do you want to use? 75 or 25? 80, 20, 85, 15? Sometimes it's 75. Sometimes it's 90. I don't know. If only we knew. Right. I'll leave it there today. I'm back tomorrow morning, 8 o'clock, and when am I back? 1:15 tomorrow. So tomorrow we got GDP for the US dollar, so we'll be trading that one tomorrow afternoon. And obviously in the morning we're going to look through what's happened with the Aussie. We'll obviously have a look at the Aussie as well in the afternoon as well. But those are your main news events tomorrow. So just be aware, Aussie and New Zealand are going to be the real kickers tomorrow. Those are the ones that are going to make the most movement, probably. We'll have to wait and see, but more likely. Yeah, and as you can see, we've moved down. Now we're moving up a bit. We're still not going anywhere on that. So we will see where we are tomorrow. All right, so have a good evening. I'll be back tomorrow morning and tomorrow afternoon. Anything you need, let me know. And yeah, anything, come into Discord. I'm loving Discord. It's so much nicer than Telegram. I'm so glad I've moved there. I will shut down Telegram at some point, or at least pause it so that people can't post and say, come to Discord. So anything you need, I'm in Discord. I'm also in Telegram, but anyway. All right, have a good day. I will see you guys tomorrow.